Hello and welcome to the strategic analysis video for the strategic case study for February 2017 on reality TV company Evestar. So before we begin, just have a quick introduction to the case, which of course is on Evestar, a reality TV company based in Thailand. Now they're also very successful. They're currently the number one, and they're also a listed company trading on the Thailand Stock Exchange. Now, it's an interesting company because, of course, it's probably a familiar industry to many of us, as in we are well aware of TV, we're well aware of reality TV, but do we really know the ins and outs of it? How does a show become so successful, and how does it get that way? And we're going to analyse the industry and analyse Evestar using the rational model. So we're going to look at where the company currently is using various models such as Pestel analysis, Five Forces analysis and SWOT analysis, where they want to be in the future, where they want to ultimately get, and finally strategies of how they're going to get from where they are now to where they want to be. So we'll kick off by looking at where they want to be, where they are heading, how they're going to meet their stakeholder needs in the future. And we're going to look at governance, ethics, and stakeholder mapping in this particular section. So we'll start off by looking at mission statements. Now, there wasn't actually any information on mission statements in the briefing, and if so, that could be a possible weakness for the company, because the whole point of a mission statement is to really summarize what they want to do, why do they exist, who do they exist for, what are they trying to achieve. And the mission statement should help answer these questions. And one model that is good at defining these mission statements, or at least analyzing the key elements of mission statements, is the Campbell model, which dictates the purpose of the company, the strategy involved in the company, the values of the company, and finally its policies. So let's take a look at each of those in turn. So why does the organization exist? What does Evestar exist for? Why does it exist? What does it want to achieve? Well, we know that it's currently the number one company in Thailand for reality television. So does it exist to be the leading supplier of good quality reality television shows, producing big audiences and therefore producing shows that networks can sell a lot of advertising space for, which they currently are, but I'm sure they will want to maintain that position for the long term. So they want to continue to be a leading producer of reality television shows. Now, obviously, they are competing within the reality TV market. Currently, in Thailand, there was no information about whether they license the shows or license the format of the shows abroad, in which case they perhaps will want to do that in the future, and then perhaps their goal, their aim will to become more than just the leading producer of reality shows in Thailand, but the leading reality TV producer in the world. Now the next section is values. What does the organization stand for? And I've given you some possible things under values here, such as quality, value for money, and innovation. Now you could argue that reality TV perhaps is not an an industry that comes under many of these headings. Innovation, reality TV generally is not that innovative. A lot of the shows are the same sorts of things. Quality-wise, a lot of viewers view reality TV shows as being perhaps less quality than more of your scripted programs such as Game of Thrones, The Sopranos, etc., which all come under this higher class of television. But value for money could be one that is relevant both for the company themselves and also for the networks. Now, the networks will want to purchase a show that is relatively cost effective to make, or at least cost effective in terms of the ad revenue that it's going to receive for it. So what the organisation could value itself as, or could promote itself as, is a high value organisation for networks, because whilst these shows may be expensive to make in comparison to other reality TV shows, your lower cost shows such as Debt Collector and House Flip and the other ones that were mentioned in the pre-scene, it's still value for money in comparison to your larger scripted TV shows, particularly if you consider that reality TV shows are incredibly popular. They garner a very large segment of the viewing public, and therefore there's a lot of opportunity for the networks to then sell advertising space during those shows. And finally, policies. Now, these are things that people who work within your organization are expected to follow. So your defined values, your strategies, your purpose, etc. So a good one here for this particular company, for Evestar, would be something along the lines of producing high quality reality television at a low cost. So therefore, the people who work for your organization will always have that in mind. They'll always think to themselves, is this going to be cost effective? And this helps create and foster a culture in your organization that reflects your goals, your end goal, your end mission statement. And that's important because culture, the culture of the workforce, can often have an impact on your overall accomplishments. For example, if now the people who work in your organization do not have this value for money in their mind, they'll perhaps spend more money than they should do. Your company will go over budget. You won't be producing the programs as cheaply as you should be, and therefore you have to sell them at a higher price in order to maintain your margin, or sell them at a lower price, the same price perhaps they had been paying in the past, just to keep your contacts, and then your own profit margin will be declining. And of course, the end goal of a company, of a profit-making company, is to make money for its shareholders. So that's mission statements now. Let's look at performance measurement. So this is how the company, in a sense, evaluates its current position and how well it's doing, and whether it needs to make changes in order to help meet that ultimate end goal that was dictated in the mission statement. And the main one that we use in CIMA is the Balanced Scorecard. Now, the Balanced Scorecard is where you think beyond just from the financial perspective. Now, the financial perspective is very much the old way of thinking, in that profit-making companies should only be thinking about the bottom line. They should only be thinking about how much profit they are creating, because that is the point of a profit-making business, is to make money for its shareholders. But the Balanced Scorecard branches out into these other perspectives, and the couple I've put here: the learning perspective, because you need to learn from your mistakes. You need to improve on your existing business model, improve on your existing operations in order to be more efficient in the future. Internal perspective, and that covers things like how utilized your employees are, how often they complete the job on time, and whether it was under budget or on budget, and also how satisfied your employees are. Now, for example, if Evestar had very high employee turnover and thus had to spend a lot of time retraining employees, or not retraining employees, training new employees to do certain operations, then that would be considered a waste of time, because that'd be time spent training that could have been spent just getting on with the job. And therefore, things like employee satisfaction is very important. If you have a high turnover, it could be that employees are leaving because they're not satisfied with their current position or with how they are treated. And other things that need to be thought of are things like the customer perspective. So we're not just thinking about making money for ourselves, making money for our shareholders. We also appreciate that we depend on our customers. The customers in this case being the various television networks, such as national TV, such as InTV, and Peeps as well. And I've listed a few ways in which they can measure their customer perspective as well, such as the number of customers, the number of complaints received by those customers, or also by the viewing public as well. Now, in the pre-scene, it spoke about people complaining that the show The Cavern was repetitive and just in general wasn't very good, and therefore getting those complaints from the viewing public is likely to upset peeps as well, who show the show. And by addressing those complaints, we are, in a sense, helping peeps. We are helping our customer. And we can see that in the pre-scene as well, the company Evestar was taking steps to update the show The Cavern so that it was perhaps one that people would want to watch more. And therefore, that is going to help peeps as well, because more people are going to be watching the Peeps network. And then peeps can sell the advertising space during The Cavern for a higher price. But of course, I'm not saying that the financial perspective is not important here. Again, the continued success of the business depends on appeasing shareholders. It depends on how much money they can reinvest in new shows, in updating the current shows, and therefore it's still important to analyze the financial perspective of the business. Now, we have a good profit margin at the moment, although it is decreasing slightly. We saw particularly between 2015 and 2016. Now, the company has said that this is perhaps due to favourable trading conditions in 2015, and in general, the company is still making more and more revenue, making more and more profit, which again is true. However, you also have to look beyond profit to things such as cash flow and gearing. And what was worrying for Evestar, looking at the statement of financial position, was their gearing is particularly high. They have an incredibly high level of debt financing, up to 144%, using the debt over equity method of measuring gearing, which of course is significantly higher than its next leading competitor, Bonchant, and also is worrying from the perspective of thinking about how they're going to raise additional financing, because it's very hard to raise additional debt financing with such a high level of gearing. And the company seems resilient in its ideology of not raising additional equity financing and in paying out huge levels of dividends every year. In fact, retained earnings had actually gone down at one point because it was paying out more in dividends than the company was making. Now, the company themselves should be undertaking this performance measurement regularly, and if they aren't, then that again will be considered perhaps a weakness in their approach to strategy, a weakness in their approach to their operations, because they're not thoroughly assessing the current state of play at Evestar. So now we move on to governance. Now, governance is essentially the way in which organizations are directed, administered, and controlled. And this is all to do with overcoming the problem known as the agency problem. Now, the agency problem is essentially where you, as the shareholders, are owning a business, but you are employing directors to run the business. But of course, directors will often run the business for themselves, not necessarily for the stakeholders, and in this case, particularly the shareholders. The classic example of which being where directors' bonuses are based on profit, and in which case they may leverage long-term performance, they may perhaps take shortcuts to gain large profits in one particular year so they can get their bonuses, and then they move on and direct another organization. But of course, as a shareholder, as an owner, you want long-term, sustainable, consistent growth. And so the whole point of governance is to overcome this problem by making sure that the directors are running the business for the benefit of the shareholders. And the classic model for assessing this is the UK Code of Corporate Governance, and these are some of the things that it includes. So making sure you have a separate chairman and CEO. The chairman obviously is head of the board, and the CEO is the head of the company. Now, the problem is if you have the same person doing both, they are both running the board, who devise the strategy, and then they are also running the company which actions on that strategy. And so therefore you may get a situation where they are coming up with a strategy that they know they'll easily be able to fulfill at company level, and thus get their bonus, etc. Now, independent non-executive directors, these are people not employed directly by the company. They are not employed and working there full time. They just attend board meetings every so often, And it's their job to make sure that the executive directors, are running the company in the way which is best for the shareholders. So it's basically just their job to make sure that the directors are not coming up with strategies that are beneficial to them but not to the company. And they also populate the audit, nomination and remuneration committees. And now the audit committee is essentially in charge with auditing the company and making sure that risks are being assessed, looked at and dealt with appropriately. They're also in charge of the nomination committee, which is the board that appoints executive directors, usually from senior management, but often from other companies as well. And the remuneration committee, which is in charge of accurately assessing how much the directors should be paid. Now, of course, you cannot have executive directors on the remuneration committee because, of course, again, you come back to this agency problem issue where they'll just be saying, well, I deserve to get 10 million Thailand dollars this year. They perhaps haven't done enough to deserve that, but if you allow them to be in charge of their own pay, they'll pay themselves too much. Now, think about yourself. If you were in charge of determining your own pay, do you think you would pay yourself more than you're probably worth? And I'm sure the answer is yes. Everyone will want to pay themselves as much as possible. And we also have to disclose directors' pay as well so that the shareholders are aware of it. And if the shareholders think that they're getting paid too much, then they're allowed to voice their concerns over this. Governance is also there to ensure that correct financial reporting is followed and that all the directors have the amount of material, the correct material that they need to make good decisions. If the directors are not being given enough material to make proper, well-developed strategies, then that is poor governance. And the final few points about the Code of Governance are to ensure that all directors are involved in decision making, and there's not just one who's coming up with all the decisions and the rest are just agreeing with them because they just assume they know best or they don't want to cross them. And this is particularly prevalent when you have founders still involved with the company. A lot of people perhaps will respect the founder, think the founder knows best, and therefore just go along with whatever they say. And the final two relate to shareholders. First of all, regular meetings with institutional shareholders, these may be pension funds, etc., who own a lot of shares, and also making sure that the company hosts its annual general meeting, which of course allows every shareholder, even people who just own, individuals who just own one share, are allowed to attend and voice their concerns. So now let's look at governance being applied to the preceding, in this case Evestar. So some governance definitely there. They are listed, and Thailand does have a code. The Thailand code is very, very similar to the UK Code of Governance, and it has a need to comply or explain. And what this essentially means is they must apply or comply with the Code of Governance, or they must come up with a good reason of why they haven't. Now, an issue that did arise in the preceding was that Denny White, the founder of Evestar and a person who owns 7% of the shares, he is both the chairman and CEO. So, of course, this is not complying with the Thailand Code of Corporate Governance, although they have come out and explained that he's uniquely qualified because of his experience in the music and reality TV industry. But of course, as a listed company, there is the potential for the agency problem to arise because the shareholders are not directly involved in the running of the organisation. And one of the ways in which this is overcome is by having non-executive directors, which I discussed on the previous slide the importance of. Now, they did have 3 non-executive directors, but as it was a board of 9, this in theory is not enough. It should be half of the board, so they could do with a few more non-executive directors. And this would be useful because they could bring wider business experience to the board. Perhaps they could employ a non-executive director who has a long history in the television network industry, and therefore they would bring more of a perspective of the television network to the board. And of course, the company provides programs for television networks, so it would be important to have this viewpoint. They would also have more people there to review and check the board decisions. There was also no mention of remuneration, nomination or audit committees on the board. That doesn't mean they don't have them, they just weren't explicitly mentioned in the pre-CIMA. Although if they don't have them, this would be considered poor governance and thus a weakness in their approach to risk management and their weakness in their approach to strategies. There's also no mention of meetings with shareholders either. And so now we move on to ethics and corporate social responsibility. Now, ethics and corporate social responsibility is incredibly important because a lot of your people marks in the exam will be based around ethics. And ethics is very important to CIMA as well, particularly under the new syllabus. It's one of its big topics that it came out and said it was going to be testing people on ethics regularly. And in fact, in the pilot paper that was released at the start of the new syllabus, there was one question that was just on ethics. It's also worth noting that ethics has been a requirement in at least 2 variants ever since. So it's incredibly important to make sure you understand the ethical implications of the business's actions. So a few ethical things did come up regularly in the case. And the big ones related to ethics versus profitability. Now, ethics featured throughout because you could argue that their entire operation is unethical. It's exploiting people purely for entertainment. And as such, some people have actually been protesting reality TV, particularly the celebrity versions of programs where they feel that celebrities are being paid huge salaries to do normal jobs that people who actually do these jobs get paid a pittance to do. And I can imagine a question in the exam coming up with regards to someone being injured, either physically or psychologically, so it ties in with health and safety here, after appearing on the show. Now, the producers of the show even stated that they deliberately choose 20 people, well, they choose 20 people every single time. Every time they go to a certain city to choose people to appear on TV and Variety, and they choose 10 who are good, and they deliberately choose 10 who are awful, 10 who are going to humiliate themselves on stage. And particularly given the changing social environment where people are being more and more socially conscious about these sorts of things, this could be a real threat to the organisation. People may start to tune out to these programs because of this, which of course will have a big impact on the sustainability and future of the organisation. We must also think about that article in the pre-CIMA where someone took a prescription medicine overdose because of the stress of being on their show. And it was also identified by the company themselves as a potential weakness to the organisation or a threat to the organisation that the mental and physical health of contestants sometimes deteriorates. And health and safety in general was also identified by the company in its risk register as being very important and something they need to stay on top of because of the backlash from the public if someone is, again, under stress and does something stupid, or of course all the people who work for the company if they're injured whilst setting the stages up, whilst they're injured going into the caves for the cavern and making sure they are safe for the contestants, but in turn getting injured. Now, a lot of other ethical issues are also relevant. These are relevant to both the company in this case, and there are also general issues with ethics that have been examined in the past. So, for example, bribery. Could be that the board pays a fee to a television network to ensure that they win the contract for another series or something. Now, some of you maybe think, well, it's all about getting the show and it's all in the best interest of the company and the best interest of the stakeholder. Whilst possibly correct, bribery is always considered unacceptable. Not only is it illegal, but it is also, from an ethical point of view, always unacceptable. And CIMA, of course, always want you to take the moral high ground. So if there's any suggestion of bribery, even if it is to win a lucrative contract that's going to be really beneficial to the company, you must always reject it. And bribery doesn't always mean, a cash in hand, under the table bribe. It could just be taking perhaps the producers from a certain television network out on an all expenses paid trip, which may just sound like the normal way in which companies may go about in their negotiation. They don't do it just at the office. They take people out, to a golf day or a spa day, etc., and then they talk about it there. But that is still considered bribery. Also, professional ethics, particularly things like integrity. This links back to both the CIMA ethical standards, but it also links back to the way in which the program operates. Are they breaching their own integrity by deliberately bringing on contestants who perhaps think they're really good just to take advantage of them, just to humiliate them in front of a live TV audience? And other common ethical issues relate to your treatment of suppliers and buyers to make sure you're not exploiting them. Now, the buyers for Evestar's programs are very powerful, but the suppliers may not be. They could just be buying materials used in set design, etc., from small companies, and thus they might exploit their power as the largest reality TV producer over those suppliers, which in a sense is okay to try and get the best deal, but you must make sure it's within reason still. And also treatment of staff on the minimum wage. This also ties back to staff satisfaction. If you are paying your employees a tiny fraction of what they are worth, if you're paying them just a bare minimum that you are legally allowed to pay them, and yet they are working with celebrities who are being paid thousands and thousands of pounds just to appear for half an hour on your show, they perhaps will be unsatisfied for that, particularly if the celebrity doesn't seem to do anything. And that links to the story in the pre-scene about the celebrities being paid 30,000 Thailand dollars to be a waiter and not even do a very good job of it, whereas in real Thailand, real waiters are being paid only 8 Thailand dollars an hour for working very hard. So I hope you've enjoyed this sample video and more importantly found it useful. Before I go, I'd like to quickly tell you about a few of the products that we do here at Astranti Financial Training, specifically for our case study courses. We have a study text which details all the key theories in which you will be expected to use in your case study exam, as well as details of how to approach the pre-scene and the case study. We also have a series of course videos detailing how to answer case study questions. This is actually an area in which many students struggle. Most of the scripts that I've seen, the failing scripts that I've seen, has actually been due to poor case study technique rather than lack of knowledge. We also have a series of pre-scene analysis videos based on the current up-to-date pre-scene, detailing all the key bits of information and likely issues you may face in the exam. Next up is the industry analysis, a pack detailing information about the industry that the pre-scene company resides in, information about the key players within that industry, and more background information on the industry in general. We also have a range of mock exams created for each level and based on the current pre-scene, which is a great way to get some practice in before you sit the real thing. We also offer marking and feedback on those mock exams so you can see where you are going wrong and where you can improve. Finally, we have the master classes. These are 2 one-day classes taken by our expert tutors to give you all the hints and tips you need to really add to your chances of passing the exam. Also, if you take our full course, we offer a pass guarantee, which, provided you have met all the requirements of the pass guarantee, you will get a free resit on the next exam should you fail to pass. So once again, thank you for your time. If you're interested in any of these products, please visit the website www.astranti.com for more information. Thank you.